3. China stimulus. The PBOC's announcement on Monday of unexpected stimulus measures appear to be being received well by markets. Discounting the initial shock of such extraordinary measures, market participants have shown trust thus far in the judgment of Chinese policymakers, who seem keen to convey a determination that trade war hostilities and a general economic slowdown will not derail the Chinese economy. The benchmark Shanghai Composite Index posted its third successive day of gains yesterday, with early indications of another ahead today, and China-sensitive indices such as the DAX climbing over 1% overnight. 4. Wall Street traders built on this activity during the North American session, driving the Dow Jones and the S&P. The positivity was engendered by the out-of-hours release of earnings from Alphabet Inc., the parent company of Google, which managed to greatly exceed expectations, thanks to an increase in advertising revenue for that company. The subsequent rally in Alphabet Inc. shares was enough to push the Nasdaq to another all-time high, although the gains for that index were unwound during the day. The attention will consequently turn to earnings reports out of Amazon and Facebook in the coming days, with any further vindication of the U.S. tech boom to likely push U.S. indices higher again. 5. Inflation figures. Australian traders will have their attention firmly fixed on the release of CPI data by the Australian Bureau of Statistics at 11:30 a.m. As far as data goes, it doesn't come much more significant than inflation figures for the Australian economy, which has been plagued, like much of the developed world, by sluggish price growth for several years. The trend is expected to continue today, with forecasters predicting a quarter-on-quarter CPI figure of 0.5%. That will take annualized inflation to only 1.8%, once again below the RBA's target band of 2 to 3%. Unfortunately for Australian economy bulls, according to pundits, the lion's share of this price growth will be attributable to external factors, mostly a notable rise in fuel prices. 6. If this proves true, expect little response in financial markets, particularly relating to interest rate markets, which is pricing no move from the RBA until the start of 2020. When it comes to the Australian dollar, barring an extreme upside surprise to the headline print, a break outside of what has become a tight short-term trading range for the AUD/USD looks unlikely. The AUD/USD has kept quite range-bound lately, with gains capped around 0.742030, and support emerging at 0.7310. Although an upside surprise to today's CPI print could push the AUD/USD above that resistance, such a rally in the pair is unlikely to change trend, with the top of the trend channel around 100 points higher at 0.75207. Bitcoin is back. A surprising element to the overnight session was the perplexing rally in the price of Bitcoin. Belying recent conceptions that the virtual currency is simply a speculative instrument in times of high-risk appetite, the crypto has bucked the spike in volatility and risk aversion at the start of the week. It has now rallied over 35% from its recent lows, breaking a downward trend line in the process and reopening up a challenge to resistance at about $8,601. Analysts are scratching their heads as to the exact reason for the strength in Bitcoin given broader market sentiment, with some pointing to the possibility of a Bitcoin ETF going live in the US as soon as August. For the price watchers, look for hold in the short term to medium of support at $7,610 per 15 to provide evidence of sustained strength in Bitcoin. 8. Market watch. SPI futures up 20 points or 0.3% to 6,220 at about 7 a.m. AES/AUD 0.5% to 74.15 US cents, and Wall Street Dow 0.8% S.